Okay, folks, right back at our desk after a 3-day weekend. War over, not over, war over. Who cares? Hardware stocks don't care. We'll figure it out. I mean, it's the same thing every week. Rinse and repeat. Deal, no deal. Member of understanding. But you know what? We just keep focused. Hardware stocks, software stocks. Micron earnings this week. You talk about a high bar here. Above the top of my house. 835. We will be joined by Tim Quast, Market Structure Edge. Talk about the role, right? All the new options, everything being recreated today. After that expiration, fireworks on the expiration. Things don't always turn out the way you think they're going to be. Hey, we're fired up. We are ready to go after a 3-day weekend. You hit the like if you're ready to contribute in the chat. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, looking at our charts brought to you by TradeStation. Born to trade, chart, analyze, customize, all-in-one platform. Trade smarter, move faster, and stay in control with the platform built for traders that are integrating AI into their trading. Well, folks, not much happened. We're down 7 handles. Kind of a strong day on Friday. You know the news. We went down, but right back up in an important area. We're going to be starting out in a battleground for the week. We'll see how the market reacts. The buck is up again here. The buck is up over par, trying to go to 101. Strong buck here. TLT, a sneaky update on Friday for no reason. Well, giving it back down today at 86.35, down 40 cents. USO trying to find the bid here, down 99 cents and 113.88. GLD and SLV, well, they're going in opposite directions. GLD slightly in the red, SLV slightly in the green, and Bitcoin up about $1,700 at 64,635. Let's bring in one of the fathers of the show in the show. Happy Father's Day. Dennis, how was your Father's Day?
It was good. It was good. Relaxing. I actually went golfing, just a little 9. First time the boy was out on an actual golf course. We've been going to the simulator for all winter, but, up here in Georgian Bay, the snow has just melted here now. So the golf courses are open. So it was a beautiful day. I actually have never done this before. It's an executive 9, so it's short. But I was like, my golf shoes, I get out there because I didn't really golf much this year. My golf shoes are completely broken. I'm like, I can't golf these golf shoes. So I'm like, I'm just golfing in sandals. So I literally went out there, golfed in sandals, which is ridiculous. I tell you, maybe that's the secret because the first hole is a mess. The first hole is always a mess. You know that. Second hole, it was a par 4, got a par. Third hole, par 4, got a par. Fourth hole, par 3, got a par. Fourth hole, which was like a ravine and everything like that. I get a drive of like I'm not a great golfer, but I get a great drive. And I was checking. I was like, I think it went down in this little ravine. Like I'm checking. Spencer's like, it's a ball up here by the green. I'm like, is it a mojo? Because I shoot this Nike mojo because I shoot no-name balls because I suck. And I'm like, he's like, it is. I'm like, oh my gosh, that's my ball. Like I hit that like 240 yards. I never hit 240 yards. They like 200 because I suck. I have no technique. But anyways, boom, right up there. Par on the fourth hole. I hit 4 pars in a row. I've never done that in my life.
Wow. 240. I would probably either.
Can you outdrive me?
Oh, I know I can outdrive you. There's anything. I mean, I won't go into that.
I'm never going to beat Joel in a sport. He's not going to allow it.
Like, no. First, I mean, I could hit my drives 280, 300. Easy 9 150. Pitching wedge sometimes from 150. But anyway, I got 2 rounds of golf in Friday and Saturday, 18 and 9.
Did you get 4 pars in a row?
I did not know because I played a real course. But I had a 44 on the whatever. People don't want to hear our scores. But I got 3 swims in too. 2 golf on the same day.
This guy, man.
super
athlete of
active,
athletes.
man. I'm fired up.
Bring
But
Brentster in here.
Brentster, what did you do?
Did he golf too?
No.
Hey, I didn't golf, but
I
I
didn't
was
golf.
I was cracking up listening to you guys talk about your golf, so that was fun.
Yeah, we're both
I
trying to flex here early in the morning. I flex and he just squashes my flex, says he can outdrive me by 60 yards, and said he golfs on only real courses. It's all good.
Real quick, Father's Day. You guys are gonna love what Emily got me.
Dad joke
fuel right there.
Coffee.
Oh man, do you have one for us? Give us your dad joke. Do you got one?
I don't have one. I don't have one yet. But I do have some
Oh.
stories. First of all, we gotta Brent, tell us about your Father's Day, and then we gotta pay our condolences.
I hung out with my dad. He came down to Detroit and he took me grocery shopping.
Well, that's cool.
So thanks,
That's
Dad.
always fun.
I love you.
Where does your dad live now?
He lives in a town called Romeo, Michigan. It's about 45 minutes north of Detroit.
Oh, not too far away.
He's like, I like the cruise. Yeah.
Nice.
Yeah.
Nice.
It was a great Father's Day.
All right.
Awesome stuff.
We got to acknowledge the passing of Alan Greenspan. And I got a good Alan Greenspan story for you.
Briefcase?
Irrational Exuberance. Okay.
Sorry,
Back on the oldie desk in 1996, of course, when he made that, the markets were irrational back then. I mean, we had crazy moves back then.
No.
And we had crazy traders, and we traded retail. We traded I mean, they were crazy markets. And so for months and months, he would say irrational exuberance. And so I would use the term all the time. And so there was a new assistant named John. He was Opie's assistant. And it came to pass, the term came up, and he turns to me and he goes, Joel, when did you create that term? And the entire desk just burst out laughing. They're like, Joel didn't make up. That was from Alan Greenspan.
Good old Alan Greenspan.
Yeah, John, I'm texting all my oldie guys. I'm trying to figure out what his name was. I don't know if he's still in the business or not, but yep, he worked for and this last quick story, we'll get to the markets.
Yeah, they're gonna go nuts.
He was with Opie, okay, and Opie was head of the desk, and Opie, man, he ran that desk. He was a very aggressive trader, and we traded some thin stocks, and sometimes he would get caught in the thin stock with a lot of and he would be like, I know there's news on the stock, and he would say, I'm going to sit on the desk Indian style. And he'd have an assistant. We had bridge back then. And he would keep hitting bridge to get the news. He goes, you sit there and you hit the refresh on the news until something comes out. And then eventually something came out on it. But shout out to Opie. I'm trying to get him on the show. He's a little bit shy, but we'll get him on. And I'll save the Kmart story, the Kmart fishing pole story for another time.
Oh my gosh, too many stories. Claude has failed us on the grading of this show. We have completely failed because we talked too long about sports, and it's a stock market show. So let's get away from the stories here. Stop story time and start talking market time. And there is some news here this morning, but I just want to say, recapping last night's action, S&Ps. We get the deal, no deal. And Brentster, if you want to tell us what's happened over the weekend with the deal, no deal stuff. I know over the weekend it was full on war. Trump said if they don't sign the deal, he's going to start bombing them. And then there was a walkout in Switzerland by Iran, apparently. But apparently, they were up all night here, and it looks like we got another deal again. But even though we were down last night at 6 o'clock on the futures open, and even though we were drifting lower between 6 and 8 o'clock, you knew at 8 p.m. that the Robinhood traders would save the day. And I got to tell you, Joel, if you can show the futures chart here, it explodes right at the 8 p.m. Robinhood open. And it is not coincidence. It is not anything like that. It is fully that stocks open on Robinhood at 8 p.m. and they start buying up the stocks and the futures follow. That is exactly what happens at 8 p.m. It seems like almost every night here now. So if you can zoom in to last night, I don't know, maybe that's
right here. So this is 6:22 is actually today. So it's right here. Right here is 8 p.m.
Yeah,
right
8 p.m. right at the very bottom, and then we just explode higher. This is like the trade. Just buy them at 8 p.m. because this is what they do. Robinhood starts in and coming and buying stocks, and they can't stop it. So you knew at 8 p.m. they're coming and they're buying. So at Robinhood Open, I'm like looking at the Robinhood Open last night, and obviously through IBKR, and Micron and SanDisk both open green. We're down 0.74%. S&Ps are hammered. Lots of stocks down. Micron and SanDisk say, no, thank you. We don't participate in sell-offs. We only participate in rallies. Both those stocks go green. Obviously, Micron's going to report this week. Both those stocks up significantly again this morning. You're trying to short these names. You're getting it handed to you. SanDisk up another 71 points. Micron's up another 4%, another 47 points here. The party just continues. What I tweeted on the weekend, Brentster, was before everybody was like the end of the world. We're like, oh, watch, Black Monday's coming because, we've got no deal here again. And, like the Strait's closed forever and Iran's closed the Strait already. The stock market's going to crash on Monday. All I saw was doomsday. The entire weekend, the stock market's going to crash. The stock market's going to crash. So I tweet out on June 20th, which would have been 2 days ago, because I couldn't take it anymore. Like I'm sitting there trying to relax on Saturday, and everybody's just
well, maybe don't look at your Twitter.
Well, you're like sitting at night. It's 8 o'clock at night, and you're sitting back, and you throw a look at what's going on, and they're just doomsday everywhere. Like everybody's calling for Black Monday. I'm like, AI doesn't care about the Strait of Hormuz. Half the market is AI. There was a stat going around. 45% of S&P stocks are now AI stocks. I don't know if that's correct or not. I don't know where it's from. Sounds right. I bet you it's even more than that if you start adding up all the other, auxiliary plays. But bottom line, this stock market hasn't cared about the Strait of Hormuz in a very long time. Yes, oil. Yes, there's certain stocks that are sensitive to it. But the Strait's open, the Strait's closed. The stock market really hasn't cared. The stock market has cared about AI. It has been AI driven. Do you honestly think the stock market is going to crash because we didn't get a deal for the 44th time? Fool me once, shame on you. Fool me twice, shame on me. Fool me 44 times, I'm an idiot. I need to stop trading stocks. So if you're sitting here and looking at the Strait of Hormuz for your market gauge guide, and you're shorting all your stocks because the Strait of Hormuz is closed again, you've not listened to what has happened in the last 2 months at all, and you need to stop trading. Stop trading off the Strait of Hormuz. It doesn't matter at this point in time. 44 times we've had deal, no deal going on. It's ridiculous. So who knows if it's going to be closed tomorrow. But if you're anticipating a huge market sell-off because the Strait is closed, you're not watching what's happening in the stock market.
Dennis, can you go into real quick the significance of the moves in Micron and SanDisk right at the open of futures?
Well, these are your leaders. These are, again, they're not the largest market cap stocks. People will say, well, NVIDIA is your leader. Well, NVIDIA hasn't been leading this market in a very long time. NVIDIA's gone nowhere for the last 3 and 4 months. We have new leadership. It's been the memory names. This is the hot toy. This is what is sexy in the market. This is what the bots come into. This is what it just doesn't go down. These are the two stocks that everyone is talking about now. SanDisk, Micron, SanDisk, Micron. If you put $10,000 in SanDisk a year ago, you're a millionaire or something like that. I don't know if that's correct, but that's where we are. This is your leadership. It will change again. There will be new leaders. These will become old toys as well. Just like the whole Woody, Buzz Lightyear thing, you throw away Tesla because you're buying SpaceX, that whole trade there too. There's always a new sexy toy. But right now, you've got to always be looking to your leadership. So, that's what I do very well, is I know who the leaders are. Micron SanDisk couldn't care less about the Strait of Hormuz being closed. They're not going to go down on that. So that means your AI stocks are going to prop up. Like AMD was trading down 15 points on Robinhood last night at Robinhood Open. I was like, you think it's going to stay down at 525, 523? Probably not. Not with Micron SanDisk staying higher. And bang, you come in this morning and it's up $3. These are the opportunities. Know your leaders. Blindly buying the dip continues to work. So you don't even have to know anything. Just blindly buying the dip, it seems like at 8 p.m. when Robinhood opens, is going to make stocks go higher. And that's what we saw last night once again. So doomsdayers lost. Again, they keep losing.
Joel, I can't hear you. It doesn't look like you're on mute.
Weird,
Joel,
he's not on mute.
No,
he's got some toggles.
Brentster, you said you had something.
Oh,
you had a question. Brentster, you said you had a question.
I asked the question about why the significance in SanDisk and Micron.
Okay.
Just because of the leadership, just because they upped 1,000% here in the last year.
No, you're fine.
Or 2,000% maybe in the case of SanDisk. I mean, that's where the market moves. Western Digi, Seagate, obviously in there as well. WDC has been unbelievable. In the last 5 days, WDC has gone from 500, 800. Why do you talk, Mike? Why does these guys talk AI stocks all the time? I don't want to hear about AI stocks anymore. AI is a bubble. Why do you keep talking? Because you're making a lot of money in these
Making
stocks.
money.
What stock's going up 50% in 6 days? It isn't your old school oil stock. It isn't your banking on because you're thinking the strait's going to close. I mean, it's not all these other old school names. They're not even NVIDIA anymore. These are the sexy names. Intel, yeah, this is where money is flying into. Does it make sense? Is it irrational exuberance? Probably is. Do they crash at some point in time? Probably do. But you know what? At this point in time, it's hard calling tops. The hardest trade is calling tops. And if you're going with the momentum traders are just getting richer and richer and richer.
It is, I mean, you guys asked me for technicals here. I mean, 1149.43 was the all-time high. It's trading at 1184.72. So support at the former all-time high and better support on the all-time close at 1133.99. SanDisk with the same trading new all-time high, trading above it by $81. So with these things, folks, I mean, just keep your eye on your pre-market highs, look for follow through, and then maybe a 1 or 2 good rug pulls during the day. I will say the way things are setting up is, Micron got earnings, right? So what are they going to do, right? There's a catalyst and there's a high bar. Very, very high bar.
Very high bar, but we've seen in this earnings season, stocks with high bars still tend to go higher. Dell had a huge high bar. Resolved higher. We're like, now I was even nervous about it going into. We've seen a lot of stocks that have been loved. They don't even go that down. Remember, wasn't it Western Digi or Seagate that you said, wasn't it Western Digi, Brent? We're on. You're like, this isn't even that great. Like, this earnings report is okay, but it's not killer here. Stock goes up anyways because they're just, everybody's just banking on the memory shortage continuing in perpetuity. And you know what? Once momentum gets going, this is the momentum market. It's pockets of momentum. It's not all stocks. But man, when it gets going in one direction, it just can't stop. Maybe it's William O'Neill, and every single algo is programmed for William O'Neill momentum style trading here. This, buy high, sell higher. Maybe it's every retail trader doing the same thing, buy high, sell higher. But that's the market we're in, and that's the market we've been in for a very long time. Sometimes the whole thing's momentum. Sometimes it's pockets of momentum. But right now, it's full of pockets of momentum, and that's what we got to highlight. It's our job in the show to talk to you about the pockets of momentum. And we will try to call the tops. Joel's tried a couple of times unsuccessfully. I try every once in a while, usually unsuccessfully because it's the hardest trade ever. But, that's what we've got to do on this show is continue to talk what the movers are. One stock that has lost momentum is SpaceX. SPCX, Joel, we were talking about this one, and has somewhat lost momentum here. I mean, 3 days up, you do the 3 days down trick. Is that what's happening here? Kind of looks like it. We got the big move from 135 up to 225 when it was going to be the biggest, most powerful company in the world. And now that's been put on hold. Stock is down here again today. So momentum has come out of this. Value investors are saying no, thank you. Is there a chance for it to eventually grow into this valuation? I think so. Will I buy SpaceX at a certain point in time in my long-term account? I think so. Am I coming in and buying at 178 today? I don't think I have enough information yet. What do you think, Joel?
I think right now the bears are in full control until this clears 187.50. and gets above it. That's a resistance. The high was the high on Friday was just above that at 190. You're not at use your daily lows right here. 172.11. That was your low on Friday. See if you get a look at that level. If you're playing for short side or short ETFs, it'd be good for a bounce there. And then you have the two other lows at 68.35 and 149.34. I think at this point in time, you got to be thinking that, the bears are going for that opening day price. Put everyone in pain that bought it on that first day. But, we know that there's a short float out there on it. We also know that institutions are looking for it. So a couple different things to do. But right now, focus would be the mark. I'm sure a lot of people would like to see the close at 185. I'll call that resistance. And minor support 172.11. that would be your low on Friday. Trading down $7.25.
XBI, the weekend trade works again. This is something that I coined. I've been doing it for years, buying the XBI into a weekend, because often on the Monday we get deals announced. We get maybe some good trials happening here. It's never 100%. No strategy, folks, is ever 100%. But if it's 55, you can make a lot of money with it. I tell you, I don't know where the XBI bats. I don't add it all up, but I can tell you I make a lot of money doing it. So what do? I buy XBI on the close and I sell it on Monday morning, because often their deals are in there. Rewarded once again. This trade made my weekend here. We do these live in the STN Think Tank. We talk the stuff live. We remind you live that I'm doing the XBI. I post it that I'm doing it in the STN Think Tank there. So, so again, XBI trading up 2.5% this morning. This is one of the biggest XBI trades I've ever had. Usually it's up, like, if it's up 0.8%, the S&P is up 0.1, you're making a little bit of money. Up 2.5%, huge day for the XBI. Brentster, lots of drug news. Let's talk about some of it.
Yeah, congrats on the nice trade. We have a deal for APGE. They're going to be taken not going to be taken private because a public company is buying them. I believe it is AbbVie. AbbVie's going to buy Apogee Therapeutics, stocks up 50%. We had some positive trial data out of Definium Therapeutics, DFTX. I'm also seeing ICCM up 20%. I'm seeing Oruka Therapeutics up 16%.
Wow.
I'm seeing Regenex Bio up 12%. I could keep going. There's quite a few names up here in the biotech space this morning.
Yeah, so it's a biotech Monday morning. This is typical. Sometimes you have seasonality trades. Sometimes you have, other trades at different time frames. Monday morning is usually a decent day for biotech because these deals consummate over the weekend. Obviously, this APGE deal is the big deal for obviously for the biotech sector and for XBI, because XBI is 1.3%. So right away, it's 1.3%. You're getting 0.75 just from the APGE deal. Why do I trade? Why don't you just go buy APGE? People will say, like, you're trying to guess which stock's going to get taken over. It's not that easy. But when you do the XBI, you get exposure to a whole pile of smaller biotech names. And heck, if one of them get bought, there's 146 stocks in the index. If one of them get bought, you're probably going to make some money off of it. So it's nice that way. And obviously rewarded for that this morning here with the APGE deal. So XBI too, this is another, ETF, Joel, too, which we could do technicals on, because it's trading not at all-time highs. You got to go back. We still have not gone back to all-time highs on the XBI from 2020 when, biotechs went nuts and got up to $174. But it's been on the comeback trail. I'm long XBI in the long-term portfolio. Obviously, I was long extra over the weekend. I've sold that trade portion of the trade, different accounts, fully different accounts. Thoughts here, XBI, technicals.
Joel, now you are muted.
One today. Traded right near the highs of the pre-market session, 144. This takes you back to levels that you have not seen since a year after COVID. You had a high of 141.50. Pretty much airing here at this 144 area. A lot. Look at all those green monthly candles working on the green one. Right now, I just say 144. That's where the volume's trading. It's well bid there at the time. I don't think you have maybe the weekly might give us something a little bit different to look at now because it's been so long. So just keeping an eye on the pre-market high for that, and going back to the daily. AbbVie, they must like the deal. I mean, they're paying a huge premium here, and the street seems to be rewarding that premium being paid here. A little bit unusual, but trading up $4.50. I don't know how big of a deal it actually is.
$10 billion. It's fairly large, Joel.
I
it's
don't
not
know.
nothing.
Yeah. I wouldn't be surprised if this went red today. Like the arbitrageurs.
Well, usually you would see it by now. So, it is surprising to me. Like on the small deals, they don't care. The big stocks don't move as much. And AbbVie's a huge company, so it's not like you can't chew on it here. Talking AbbVie's a $382 billion company. So $10 billion is not that much. So, but sometimes they'll take the $10 billion, knock it right out of the market cap, which would knock this down 1%. That didn't happen here today. So, but I mean, always when you're I did risk arbitrage for years of bright trading, years and years and years. So I know a little bit about it. You're looking at the deal, you're looking at the price, you're looking at the market caps, you're trying to figure out, is it all stock deals at cash? If it's cash, they don't usually care as much. If it's all stock deal, then sometimes they'll knock the premium out of there. But when you got a $382 billion company buying a $10 billion company, you're not going to get like a 10% down move on it. It wouldn't make any sense at all. They knock it down 2.5%, then you're at the 10 billion right there. But they're not doing that. They're actually buying it. So maybe they just like this deal. Maybe they like that AbbVie needs some growth. The Lilly, Lilly has been doing this for a while. It seems like every Monday morning we come in, Lilly's buying something with their excess cash. So maybe they do like these biotechs getting scooped up here. And maybe they think, some of these are actually going to turn into big money makers for a company like AbbVie, where growth has stalled.
It's been under pressure lately, coming down from the 230 area, the 215. It wasn't like, and it was kind of it was a mixed market last week. But the 50-day for you, 50-day, that's actually the 200. The 200 is at 220.57, pretty much where we're trading. The 50-day is below it. So we'll see. I mean, a lot of red bars, a lot of people. I'd be if I had this. And they're doing a deal, even though it's not a huge deal. I mean, there has been selling pressure in this, and now you get a nice pop. So right here, they even use Friday's high. If you get to Friday's high, then I absolutely love this deal. It pair of highs, 222.50 would be a target on the upside if they still really like this deal for ABBV.
We've got other deals here too. Deals with Getty. So it looks like they got an AI deal here, GETY.
That's right. Getty Images announces a display partnership with OpenAI. Let me see if there's anything else exciting.
The name
here.
You want to see. OpenAI.
Under the partnership, Getty Images licensed content libraries will appear across OpenAI search and discovery experiences within ChatGPT. This is a short press release. It's literally 3 paragraphs. There's not really much else in this release besides what I read here. Getty shares are trading up sharply on this, trading up like 70 cents. Joel, you're back in the money.
Yeah, boy, I could have got out even there if I'd been out.
You should have woke up at 4 a.m. here, Joel, and maybe said, okay, thank you, I'm getting the hell out of this thing, because that spike is gone.
I know.
It's officially in a bear market from where it was just at 4 a.m. here, losing 50% of its market value here. Is this over? Is this story over? Is it coming back?
It's a complicated situation. Shutterstock, that deal has been approved on several different fronts, and the price that Shutterstock will be at is much higher. Concerns about debt with Getty, the debt that they're taking on. So I'm just holding on to this one. Be a hero when it goes to zero, or when the deal,
I never heard that.
Yeah, the deal consummates. It's a speculative trade. But they got the AI buzz, right? And they need to do something. Michael Pachter explained it, very well. I mean, Getty has a library of, many different images of, because my daughter Emily works for them, just great images of, events that are going on, or Nate. She's done some dark sky stuff, very, where, Shutterstock, it has the huge library, and it was thinking that they, the customers together combining it, in theory, it's supposed to be a good thing. But in theory, the market hasn't liked it very much, and the arbs are done with it. So we'll see what the pop happens here. It's got the buzzword. I plan on doing absolutely nothing with the stock.
Joel buys and he never sells. Let's be honest here. You have day trader, short-term trader like me, and you have the Warren Buffett type long-term investor like Joel. They get in,
except for the Peloton. They buy it and they hold it forever. For those that are going to bring those out, Lisa did sell the Peloton a while ago.
Oh, she did. So Peloton's finally
she did. Yep.
Don't have to talk about that stock ever again.
I want to sell everything all the time.
I know. If it was you, Joel, you'd be exactly like me. Because
out.
You know what? Because we got the trader bloodness. It's so hard. Like, I struggle tremendously, balancing your long-term investment thinking with, the short-term. I have separate accounts to do it in, so I don't even look at my long-term account. Try not to look. And I think this is the only way to do it. I don't think you could ever long-term invest in a short-term day trading account. I think the only way to do it is have 2 accounts. One for your investing, one for your trading. You like, the story, you like the chart, you do some trading here. You like the, long-term fundamentals, good companies, reasonable valuations, you put in the long-term portfolio. But, I still have that trader in me. So the trader comes over and sometimes I get this, I think the market's going to roll. I better sell this stock, over here. And then you just watch it go and go. Or you're like, you get up 20, 30%. You're like, man, that's a good gain. I better take that gain. And then all of a sudden the stock's up 2,000%. You're like, why did I not buy and hold that Micron? Why did I not buy and hold, that, other stocks? So, there's been so many, even Marvell recently.
Yeah. I mean, you talk about boring, super boring. To me, 5, 6, 7% were just yields that, I look for in the portfolio. Of course, have years where you exceed that. In the bad years, I'm never, I'm not down 20. I'm not down 25.
Yeah.
I don't
It's also
those.
age, when you're 80 years old, like Joel here, you got to think about retirement at some point in time. So he can't afford to lose his nest egg. If you're a young buck like the Brentster here, though, you got your whole life ahead of you.
He's a cash man. He's a cash man. But that,
I always got some cash too. I've always got some cash.
Dennis, I don't know what they have out in Canada here. Some of these tax-free. That's another thing too, man. You don't want to pay the tax man.
I know.
You don't want to pay the. I've been trying to drill this into your head too, Dennis, and you're too you just like, no, man, your portfolio is in a fast market all the time, but. 5, 6, for an old guy like me, 5, 6, 7%, and I'm not paying the tax man. That just makes me happy. That just it's such a good feeling. But anyways, getting away from that, we are at 8:32. We have Tim Quast coming on at 8:35. Do we want to do our crowded trade 101? From Friday?
Yeah, we could get that in. It was from Thursday, actually, because we had the synthetic Friday on Thursday, and I get confused there too on this. But, so we were in the S&P think tank there, and you're like looking at all these stocks, and you have the whole list. I have the whole list of what's getting added to the S&P, what's getting added to the NASDAQ, because the rebalance, the quarterly rebalance was there on the NASDAQ 100, and the S&P had some ads going in. Marvell was going in. Flextronics was going in. But we always warn. We say sometimes these trades can get crowded, and just because a stock is going into an index doesn't necessarily mean it's going to rip on the close, because what happens is everybody knows Marvell is being added to the S&P 500. You have anticipatory traders saying, I'm going to buy this Marvell here because it's got to go higher on the close because the indexers have to buy it. But it's all about math. If the anticipatory traders, the traders who are thinking that this is going to get added to the index, outnumber the actual indexers, the stock can actually go down. And what happens on Marvell, MRVL, right at 350, posts a huge sell imbalance. Everybody's like, oh my gosh, look at the Marvell move. Down 20 points in like 20 seconds. Straight down because everybody's anticipating a big buy imbalance. Oh no, it's a sell imbalance. Oh no. Its stock goes down and lost 20 points in 20 seconds and then stayed down and closed near the lows. That was not for company fundamental reasons. That was not news. That was simply crowded trades 101. The indexers themselves were outnumbered by the anticipatory traders anticipating the indexers buying. And obviously those anticipatory traders wanted to get out, and they got out with their losses there if you were buying it a few minutes before the close, because stock lost $20 on that close.
Were you tempted to take the other side of those losing trades?
What I do is I trade them a different way here, and this is all in the think tank, all the strategies all the time. I've been burned anticipating that demand before. So what I do is I usually fade the move. So when you see the close, the stock's tanking on the close, you buy. I can't remember. Did I buy the Marvell close? I can't remember. If I flipped out of it, I may not have got it because I thought it was going to close lower. I think I missed it.
I can't remember.
Yeah, it's Thursday. It's like three days ago for a day trade. It was like 3 years ago. So I can't remember if I made a trade. I know there's a few people who bought it in the think tank there, and it did bounce up, and it is bouncing back. So a lot of times you see the big move, and then you get a little bit of dead cat bounce out of it. So that's good. And, will the stock go back up here? I mean, it's still AI stock. It could, but you definitely had some people caught here. So I don't know if those short-term traders are out here or not yet. That's still to be determined. We're still waiting on Tim.
Yeah, Mr. Quast will be joining us here, Market Structure, and I just heard a ping.
I know.
There he is.
Comes right in like that. So we'll get Tim here in just in a second. We'll let him get set up here. But that's just what we wanted to make a note of, is just because a stock's going in an index doesn't necessarily mean it has to go up. it can go the other way too. And I bet you a lot of people got burned on that Marvell. Flextronics was the other one going in, FLEX. It didn't get crowded. It actually went up $5 on those imbalance numbers there too. Nobody's paying attention to it. I don't know if it's Flextronics, Flex Ordinary. I don't even sure. Is it called Flextronics anymore? I think it used to be called Flex.
Yeah, it used to be Flextronics. I think
we can't even get the name right. So obviously this one's not being anticipated nearly as much and talked about as Marvell. Everybody's like, Marvell's going in, Marvell's going in. Everybody's saying Flex is going in, Flex is going in. So Flex didn't get crowded, and Flex was actually going up on the index ad. So the sexy, name going into an index doesn't always necessarily have to go up. Tim is ready in the background there. He's always ready. Let's go run that intro and let's get our buddy Tim Quast.
Joining us from Colorado would be my guess, correct?
Yeah, I think so.
That's always a good guess, Joel. Good to see you guys. And I don't know if I'm always ready. It's the good news is it doesn't take long to get 8 brain cells, which is what I've got, ready.
Oh.
On the other hand, I can be caught off guard. Good to see you guys, though. Happy Monday.
We get caught off guard in this market every once in a while here too. And I mean,
Agreed.
Obviously deal, no deal catches us off guard all the time. That's why, sometimes it's just good to look and have a quantitative system and a quantitative approach to the markets, Tim. And you have that on Market Structure Edge. So if you want to show your screen, we always give you this time to show supply and demand. They love asking you. They like getting a few tickers. If you have a ticker for Tim, let us know what it is, because Tim can look at supply and demand for any individual stock, as well as obviously looking on some of the biggest ETFs as well there. And obviously supply and demand isn't a perfect formula here, but you've got a pretty good system going here, Tim. So, let's...
What you need is a system, right, Dennis? I mean, whatever you choose to do, and both of you, you guys are experts at this, and there are a lot of ways to approach the market, and by no means is the quantitative approach the only one to take. The reason I like it is that the market is mathematical. I mean, it really explains a lot about the market. You listen to the pundits. Not that we aren't, I suppose, in some sense, but you listen to the pundits, and generally the discussion is about fundamentals. I've heard a couple of guys this morning talking about how earnings and earnings are likely to continue to be very strong, and multiples could decline, which then, the thesis is, well, that fuels the market. Well, it's only true to the degree that the money in the market is focused on fundamentals. I mean, you guys aren't really focused on, you look at it, but it's not the core to what you do. I've spent over 30 years in the investor relations profession. That's the liaison to Wall Street for public companies. The core of that function is fundamentals. And the great vexation for public companies is that you can have great fundamentals and your stock performs poorly. I can give you a list as long as my arm that will demonstrate that that's not how the market works. The market works according to whatever the money is doing. What is the principal thing that is occurring? And you were talking just before I came on about Marvell and Flex getting added to the S&P 500. I can't keep up with all the adds and subtractions, but that's a great illustration. The market is principally driven by models and principally priced by machines. So if we want to have some idea of what's going to come next, which is what we want, I mean, we want to know what is the risk or opportunity ahead, right? As investors and traders, should we be concerned? Should we be opportunistic? Well, you have to think about, well, what are models doing? How do they work? And how do machines set prices? Those are the core things. And the market is complicated, but there are some simple takeaways.
Speaking of how machines set prices, I wanted to ask you a question. This came up in the think tank, and people were talking about short selling. I think it was maybe even somebody on CNBC. Another person wants to ban short selling. And then I went on this rant, and I like to go on rants every once in a while. That I don't have the data, but I bet you Tim Quast may have some of the data here. I was saying I would bet the majority of liquidity on the ask at any given time, if you take through the S&Ps, the majority of that is short sellers. because it's market makers, and market makers don't own the stock. They're offering it short. So I'm like, if you ban short selling, which we saw back in the 2008 financial crisis when they banned it on all the banks, you saw liquidity vanish. Exactly. So we know there's a lot of executions. We know there's a lot of short sellers in the market, but like not talking about the executions, but the orders that are actually on the book. Do you have any idea how much of like on the ask at any given time is made up of short sellers?
Half of it, more than half of it. Yes.
More than half of it.
Right. And you have to distinguish between the two kinds. So you think about short interest, which everybody focuses on. Short interest, and I've said this many times, it's a 1974 metric. I was, how old was I? I was like, 7 years old in 1974.
I wasn't born yet.
Right, you weren't born yet. And here we have this metric prevailing that was created by the Federal Reserve. So short interest does tell you about stocks that have been borrowed legitimately, located, sold short, and not yet covered. But that's basically 2% of float in the S&P 500. And so the short volume, which is what you see here, the lower part of the graph that is on my screen, short volume is the 2011 data set associated with what's called the modified or alternative uptick rule, right?
Yes.
SAO, right? So, and when you look at that, look at this. It's almost up to 52% of the stocks comprising the S&P 500. To your point, look, the whole point of providing liquidity, which is a bogus term to me. The people doing that, they're not altruists. They're not out there making markets. They're there to profit on how prices change.
They're providing a service.
Exactly. So, well, that's what they claim, right? And look, I'm not knocking it. I'm agnostic about it, but I'm also clear-eyed about what it is. So when you provide liquidity, that is the best price in the market, and you get compensated for it, right? That's the offer is always higher than the bid. Ergo, it will always be the best price. And if you do it enough at the exchanges, they will pay you as a trader, give you a trading credit, right? So it's a maker-taker market. And so naturally, if you are exempt from having to locate shares to short, what are you going to do? What is the least risky behavior in the market? Commit no assets and make money. It is the perfect thing. If you don't have to risk an asset and you can make money, who wouldn't do that? And that's what most of the prices come from in the market. The good news is for us traders is that nearly all the time we can fill a small trade. It's not like going to the grocery store where there apparently is a giant shortage of Turkish figs. You can't find a Turkish fig in the grocery store for some. Maybe it's a Strait of Hormuz thing. I don't know, but that will never happen to you. Right? But buying Marvel is so long as you buy it in the regulatory increment, and it's not 100 shares anymore. It's only 100 shares if the stock price is $250 or less. Right? So $250 or more, up to $1,000, the round lot is 40 shares. $1,000 to $10,000, 10 shares, right? Do I have? Oh, right. Right. So 250 to 1,000 is 250 to 500.
I know they've changed it all. It's
500 to 1,000, 20, 1,000 to 10,000, 10, 10,000 and a higher, 1 share. There's only one stock that applies to. So you have to think about that, traders, that what you are buying at a marketable trade is likely to be what Citadel shorted to you, which then creates short-term risk for you. Right? So that's why I say you can never, ever, ever beat Citadel at that game. They have better machines, better data. They know what the supply-demand balance is over the next half a second. That's why we prefer to say we go where they aren't. If you look at this trading and say, well, supply is rising rapidly, but demand is still rising, what is the propensity of the market? Well, it's not yet to decline. Right? Only when these things converge does the market decline. I mean, here's a great way to see this. And, it answers the question about what's on the other side of the trade when you buy at the market, probably short stock. So when demand declines, like it did from February options expirations, demand began to decline. That's the green part of the graph. This is SPY, the price, and supply was rising rapidly. That will lead predictively to a falling market. And you can take advantage of that, traders, both directions, right? So if demand bottoms below the green line, this is where you push all your chips in long, right? Right at options expirations below the green line, supply is receding. What is the market going to do? It's going to go up, right? It's a demand supply imbalance. And now you have a longer time frame than Citadel. Now you can compete, right? You can't compete with Citadel in a half second. You can compete with Citadel over time because they're not interested in taking risk, and time is risk. And so then you have this period, demand declining, right? In that options expirations period again, but supply also declining. Now the probability that the market declines vanishes. Why? Because supply is coming out of the market. So people remove all that supply, all those machines remove supply, and the market went up, the SPY went up from, call it 710 to 760, right? So that's why. It wasn't because of strong demand, it was because of receding supply. So the question for us as we sit here, just the other side of options expirations and quarterly index rebalances, is what happens next? Does demand decline and supply stops rising and declines? If it does, the market goes higher again. That's what will happen. Now, what I can't tell you is if that's going to happen, right? If you look at the cycles, these are very unusual cycles. Usually it goes about 8 days and then it reverses. These were 20-day cycles, 20-day cycles, massive down cycle. Now what? I would think we get mean reversion, and it's a shorter cycle, and that would be fairly bullish for the market. Right? I cannot say absolutely. I always get very cautious when the market looks like it's going to top from a demand perspective into options expirations. What's the next thing on the calendar? Well, June 26th, the Russell rebalances conclude. And then June 30 is the end of the quarter, and month-end S&P index options resets. Well, that matters because it's 90% of market cap. So if you were calibrating, if you were projecting what might happen into that, would you say, is the market going to rise or fall? And that's how you think about, to me, it's a way to use quantitative data to be one step or two steps ahead all the time. You're always looking at that demand-supply relationship and saying, what's going to happen next based on what the data tell us?
Tim, we got the tickers stacking up in the queue here.
Okay.
They are ready. They are ready to go at
Let's
you.
do it.
And Well-Being Warrior wants to know about Qualcomm.
Well, which is it?
Qualcomm.
Qualcomm. Okay, QCOM. Yeah, I mean, one of the seminal chip makers. And again, the same principle applies here. You want to look at the demand-supply relationship. So demand was very good, 10, right? So if you have 10 out of 10 demand and supply declining, there's a probability you can produce returns, even because it's cause and effect. And I think it's 1 to 5 days is basically what you have. So even though demand began to decline, the fact that supply was still receding gave us this bounce, but that was the end of it. Notice that it's no higher now than it was here. Even though demand returned, supply bottomed, cause and effect. Right now you have rising demand, but it's not even back to 5. I don't like to buy things that have demand that is rising, but it's still below 5, because 5 is that's the nexus. Stocks do well statistically, historically at 5 or higher. And with supply rising, I wouldn't chase that because there are so many better things to buy than that. What else you got, Joel?
I got TE, and this is an interesting stock. We have a
T1
I
Energy.
can't pronounce this guy's name. What is it? Leonard Assemacher or something like that?
I think pretty close. I've seen him on CNBC.
Yeah, and he's hot. And then Fuzzy Panda.
Oh yeah, Fuzzy Panda. I don't like it.
Comes out. And so where are you on the Leonard Assemacher, Fuzzy Panda, TE Energy, T1 Energy? What does supply and demand have to say?
Right, it's a great illustration, right? If you were just watching this every day and you went back to May, you go, okay, it's above 5. Maybe I'll buy it there. Now you look at the supply side and say, yeah, but it's 57% short on May 8th. Then it went all the way to 62, almost 63% short. And it's at 10. It's at 10. Then the supply starts to decline. Now you buy it, right? That's where you buy it. When the supply is falling and demand's at 10. And when do you leave? Well, you'd probably leave when supply starts to rise back to the trend. I mean, you can't get it perfect. I wouldn't tell you exactly where. I might wait all the way to here and leave with demand declining and supply rising. But you can capture most of the gains that way, right? It's a very good way. It's, you know, you're not going to be perfect. It's not meant to tell you minute by minute what's going to happen. It's meant to tell you every day so you can set a market on open or market on close orders and come and go. So you don't have to sit and watch screens. I don't sit and watch screens. I'm in Colorado. I want to be out hiking and riding bikes and stuff, right? So I'm not sitting around watching screens, but you can do that every day. Right now, avoid it. Fuzzy Panda is correct at the moment. It's not the stock to be in, and you can see why. Demand has really fallen, and supply is at 50%. Not yet. What else?
All right, let's turn our attention. We were talking about the China stocks, and just no love. Alibaba. We just don't talk about Alibaba here. Looks like there's a lot of supply and not much demand here.
Let's see, because sometimes the data well, in this case, you're correct. I mean, just look at the trend line.
There's no demand.
There's no demand. It's at 1. There are certain stocks that you can buy at 1, and we make that fairly easy. Like I could profile this stock and see what has happened historically when it's at this level. I mean, it will default to 5.5. By the way, you can sign up for our free market desk notes, and we talk about this stuff all the time. Just go to marketstretcheredge.com and sign up for our free note. So this is 5.5, and it doesn't work. And you see this? Buy when it rises over 5, sell when it returns below 5. Over the trailing 90 days from February 2nd to June 18, the stock is down 36% over that time. If you did that, you'd still be down. You'd only be down 4%, but who wants that? That's not worthwhile. So what happens if you buy it at 1 and sell the downtick? Well, we can look at that and see if it's worse. So that tells you do not buy it at 1, right? Don't buy Baba here.
Continuing here.
What do you want to go to, Dennis?
Let's go. Somebody was asking for SanDisk earlier there. I forget who it was.
My favorite stock of the year.
But this one has been so hot, so we're going to the
there
opposite.
Is
like Baba
all
Ice
demand
Bowl and the SanDisk Red Hot.
There's no supply at all.
It has just been awesome, right? You know, and I have often said, you know, this is the stock of the year to me, and you can see, I mean, just how strong demand is. You don't want to own it when it's not above 5. I mean, you could have generally avoid this period. I mean, you can't do it perfectly because you say, well, it rose back over 5, I'd probably buy it. Yeah, but if it drops back below, get out. Same principle, but it's been very good. And right now, here's the good news, bad news scenario. Demand it's still good. If you're holding it, I'd stay right in it, even though supply is high here because demand hasn't hit 10. This is, however, the risk. The risk is maybe that trade's about to break down because the last time this happened, and it takes a while, you have time, you have a good 2 weeks historically where you might see a retreat, but then we could be heading into a weaker period. That could happen in Q3, right? Q2 ends, whatever that is. Next, is it Monday or Tuesday, June 30? So, I would be thinking about this stock and saying I'd be watching the demand supply relationship, and maybe in the next 2 weeks, I'll be content to move to the sides. And if you do that in SanDisk, then you got to look at the whole group, don't you? You got to look at Western Digital, Seagate, Intel, AMD, the whole lot, the whole stocks lot. If one of them falters, and here's the interesting thing. This was a very strong at 10, very strong at 10. Interruption. Well, there's an interruption. So it could be the beginning of a cycle where all the demand slows down. And if so, that could ripple into the entire market. I'm not saying it will, but it's nice to have some warning. You could look ahead and say, well, I'm going to be watching that. Because if it does break down, that will tell me it's time to move to the sidelines.
All right, Tim, before we let you go, we had the expiration, the quarterly expiration, right?
Yep.
And resetting the options, right? They're all off the board. Everyone's
Yep.
going to be trading their DTEs, and they'll be looking for the SEP here.
Right.
Came back yesterday. A lot of my numbers are just bunching up saying, oh, yeah, we go get a little strength. We're going back to old-time highs. We get a little weakness.
Right.
Maybe test Wesley. So what are you looking for on the option reset here?
Well, so, what I would say is always go look at the engine of the market, and it remains big tech. And so, you look at the broad market, it's 5.7. I mean, that's fine, right? It looks good. So then you go look at big tech. We look at 11 of these because we put Netflix and Shopify and AMD in there. And you would look at this and say, well, there's rising demand. And the market goes as big tech goes. If you looked at the whole lot, it's really interesting. I mean, look at this. The whole market is 52% short. And what is big tech? 36% short. There is a massive over-concentration of real liquidity, meaning big institutions, all the ETF baskets, they're moving the same stuff back and forth. That's what it tells you. Market makers are not, these things are not 50% short because there's a whole lot of real institutional money in there. Here's the problem. Microsoft is 1, AMD is 5.4. They're having a struggle. I mean, they're not at 10, are they? So I look at that and say, the good news is I don't see anything wrong with the market, minimal risk. The bad news is the engine is not running very well.
Yeah.
And I just think that we have this period of potential caution to get into Q2. If something's going to go wrong, it's going to happen in the next couple weeks here.
Okay. Tim Quast, you all know him, founder of Market Structure Edge, digging into the weeds on the market. Thanks, Tim. We'll be drawing you up, 2 weeks from now. So have a great day,
guys. Thank you. Have a great week.
Thanks, Tim.
Okay, we're adrift. We're adrift here, trading down 1.75 handles, so not much action there. But what do we do on a Monday? We look towards the week. Very nicely done by Michael Feehan, Mr. Everything at the Stock Trader Network. What do we have on the radar this week?
Micron highlights the week Wednesday night. Obviously, everybody will be looking to that. It's already running up into it. Like you said, the bar is very high, but we have seen these stocks get over these high bars before. The last time Micron reported earnings, we were getting the quarterly report confused with the yearly numbers because the numbers were so high in the quarter. We're like, Chip's like, this is the year. Like, it was the most blowout of blowout. Maybe that was 2 quarters ago, but it was the most blowout of blowout we've ever seen. Are they going to do that again? I don't know if they can keep blowing it out like they are, but I mean, the bar is high. We'll see what happens with them. FedEx on Tuesday is always interesting. Let's see what the real economy is doing. Gives you a little feel. And then you get CBRS. That's going to be an interesting one here too. Obviously, new IPO. It's only been out here for a couple of months here, and stocks, come off the highs, but starting to perk up here. It's not surprising. It's starting to perk up ahead of its earnings report here. So I would look for CBRS to potentially maybe have a decent couple of days as long as the market holds up here, as it, you often do see these things run up ahead of the reports.
Away from the earnings, pretty quiet econ week. We do have a couple notable corporate events to highlight here. There is Amazon Prime Day, one of them, which is starting tomorrow, goes through this week. We have a Qualcomm Investor Day Wednesday at 2:15 p.m. Eastern Time. Kind of the event that I have on my radar for this week, Qualcomm Investor Day on Wednesday.
And then Moderna looks like Investor Event Science Day. Moderna has quietly been one of the biggest runners here in the last 3 or 4 days. I know they had some drug approved. I don't know if it's a flu vaccine or what it was. I've already forgotten because of goldfish memory here. But mRNA, I want you to do a technical on this one. We had multiple people trying to get Tim to do it. Joel's good with these charts here too.
Whew,
this stock has blasted off here in the last week.
Yeah, it's a runner. Somebody get this one is irrelevant. So right away, the daily's no good. So what do? I go to a weekly, and man, look at that. Look at that rounding bottom there. I don't know what does Kenny call that? I won't repeat it. But I mean, this thing broke out. I mean, it broke out above 60. That was us, coming down. It looks good. It looks real good here. What I'd like to see is at 64.41. Not much between 60 and 80. You could go to those daily highs, but what you need in this one, and I don't know where it's going to develop.
I've got to interrupt you right now.
You do. What's up? Good news.
Micron and Anthropic reach a supply deal. Micron is flying here again. The strong gets stronger here, breaking at 9 a.m. right now. Micron and Anthropic announced a strategic agreement with Anthropic that covers memory and storage, AI architecture design, supply agreement, enterprise adoption of Anthropic's Claude AI series, strategic investment in Anthropic's Series H funding round, according to a company release. So we're seeing Micron pop up substantially here in the last few minutes. It was already up 40 points, just tacked on another 15 right now on this Anthropic headline.
1,200. Just real quick, going back to the Moderna, and then I'll preview the shows. You want to see it develop another base somewhere. Like you had this nice base here at 45 and had a nice move up, a couple lows at 50. So you're creating some air, but find out where the big boys. So they want to step up at 60 and make a bid here. Real quick, we are just a flurry here at the end of the show. I just want everyone here to be here tomorrow, 8:35. Todd Gordon joining us, Inside Edge Capital. Our boy Blue Putnam, Chief Economist, Stock Trader Network, joining us on Wednesday. Mish Snyder, Market Gauge, Economic Modern Family, Thursday. Friday, we'll talk crypto. Louis Sykes, hopefully he's feeling better. He will join us on Friday's show. So that's a wrap for today, folks. Happy Father's Day. Hope everyone had a good Father's Day. Let's see some more irrational exuberance in this market today. But that's it for today. On
the conversation continues over at the STN Think Tank. So we're going over there right now, continuing to give you some ideas. Trying.